You've made it to week number 4, and hopefully in one piece. It's time to go just that little bit deeper again, and we shift from having our overview of financial markets, what they are, what the tools that we can use, the products that we find, the participants that we find, to having some sense of like what investing is like, so how to work with strategies a little bit, just introductory. Copying the grades, I think, was a good way of getting a grip of how larger and successful players look at this space or look at investing in general. And it has been focused on investing quite a bit. I think with the technical analysis part, we are going to focus a little bit more towards the trading side already. So step by step, we're molding you into beginner traders. And if you are already a beginner trader or you have some experience, don't worry. This chapter, there will be plenty of stuff inside for you to learn as well. So, but you've arrived to technical analysis, and it's probably one of my favorite topics. Next week, I also find extremely fascinating. But I've spent, as I said before, I think a lot of time on trying to get a grip of technical analysis. And what technical analysis is, it's basically price analysis in a very simplistic way of saying it. So before we go into the slides, just more related to price analysis rather than the fundamentals. And already there I can give some perspective on this, where when an asset is new, or when a company does an IPO, goes public, or when a company is just in its infancy, there is no real price data, or hardly any price data for the asset, for the stock, right? And the same goes for example, cryptocurrency. There's not when an idea is in its infancy, there is nothing that you can study price related. That comes later when an asset is when there's a market for an asset, I should say. Then immediately from that point onward, there starts to be a price starts to behave in a certain way, or at least the people value a business at something, or a protocol at something. Some people want to buy it at a certain level, some people want to sell it at a certain level, and this buying and selling obviously is the market that is created for an asset. And from the moment that there's a market that leaves price as a certain trace, if you will, that's when we can start to apply technical analysis. And it's basically also, and I will get to that in the slides, it's the supply and demand action, so the buying and selling, visualized on a chart. And those charts we are going to study extensively to see if we can get some information out of a chart that can help us determine what may happen with price in the future. Slides. Here we go. Let me set this up. Not ruin your eardrums by dropping the mic too hard on the desk. So for this week, basic concepts, beginner concepts, and intermediate concepts. The advanced concepts we've left out because otherwise it's just going to be too much. This already should be plenty to at the very least get started. So there's many ways of describing technical analysis. This is just something that came out. Determining potential future price movements based on historical price data. But I said that in the intro a little bit already. So we want to study price, and we've got all sorts of tools for that. And I'll show you a little bit how that works in a second. It helps us, for example, to determine a trend or a shift in trend, right? I will get to that we will see this sort of like, we'll practice this as well, but just know that price analysis helps you determine a trend, and it can help you determine when an uptrend, when something, is going up nice and smoothly, but then, if that shifts to the other side, technical analysis or price analysis can help us, for example, again, turn those knobs and de-risk, or take a short position, sell assets, etc. Right? Supply and demand visualized. So at what price point do buyers think an asset is interesting, and at what price point do people say goodbye to their assets and take profits? For example, if a run has been really good, let's say 2017, Bitcoin from, 2K to 20K, just around the 20K mark, there were a lot of people that were saying goodbye, like, okay, I'm going to take some profits here because this price is really, really good. Maybe I'll buy back later, or maybe I'm going on holiday, But this supply and demand game leaves a trace. That is important. And that trace we can actually see in a price chart. And I hope I'm going to shift your view a little bit away from how technical analysis is generally explained. And you will probably read about it in the articles, but I'm going to give you as fluid as a perception as I possibly can, because I've also started with the basics, obviously, but then as I got more experienced, I really started to look at this from a very different perspective than is generally taught. So hopefully I can get that across. And what is also not unimportant, and there's obviously more bullet points, I can give you 20, but trading volume is also incorporated. So at any moment, how much volume of an asset is actually being traded. So that the buying and selling, so all the transactions accumulated, so added up together, for example, in one day of trading, that leaves a trace as well. And it tells you something about the movement of a price. But that already is going to be sort of like intermediate, how to look at that. But just know that this is the sort of stuff that we're going to be looking at. Perspectives. Now, how about first we go to the browser. The first source, I'm still going to make that, so I cannot show you just yet. We are doing our own TA video on what we think technical analysis is and what you need to look out for. Simply because a lot of videos that we found or sources that we found online, or at least in video format, were quite hypey or going too deep too fast. So the first source I cannot show you here. This is the second one. Again, Investopedia, technical analysis. What is it? And it's always, I think, a good idea. You got my opinion or a perspective of what technical analysis is, but it's also good to get the basic textbook explanation so that you know what the general consensus is on what technical analysis actually is. You may or may not end up agreeing with an article like this, but that time will tell. And again, you need to develop your own perception. Very interesting video, because in technical analysis, or in regard to technical analysis, there's always this debate or whether or not it works, right? Does TA work? Let me give you my opinion. TA doesn't work. Like it's not that static. It's not, you have a price chart in front of you, and the price chart is going to always behave in a certain way or tell you that this is going to happen or this is going to happen. It's just a registry of previous transactions, and that information can give you information to act upon. And it doesn't mean that if we draw a certain line on a chart that it is always going to follow that certain line or direction. And I'll visualize that in a second. But in that sense, not necessarily. It's just another tool, another way of analysis, and it can really, really help you. And in the way that so if you ask me, does technical analysis help you? Yes, absolutely. Your performance will really, really drastically increase. I mean, your P&L at the end of the day, if you really apply this properly. Again, does that mean that you can, very easily day trade and, the technical analysis is going to make you a millionaire within no time? Well, potentially, obviously, but that's sort of like, that takes a bit more time. It's not like a magic wand that you can use. It's just a tool, but it is a tool that once you master it, if you really see what it is about, not just the lines on the chart, as I said, but the deeper supply and demand factors and how people are trading an asset and what sort of levels or price levels are interesting, and how larger players, for example, understand that they are playing versus smaller players, and like the smart money versus the dumb money, as we say. How that interacts, how you can actually see those traces on a chart. And that is information. That chart is just information, and it's up to us to extract that information. Okay? I'll get back to that in a little bit as well. But this is an interesting video of some bigger players talking about technical analysis. And it'll lead you down a good rabbit hole if you look up who those people are. So again, so the 8 myths over here, right? I think I'm already explaining this article, to be honest, but just read through it. Again, don't debunk it. Don't just take it from me. Don't sort of discard technical analysis. That's just like a pro tip, because in that sense, it really works. Really. Anyway, some alpha there. Introduction to trading types. So yeah, this is all in relation to the time frame that you're trading, scalping, momentum, technical, fundamental, etc. So time frames, just styles of trading. And speaking about styles of trading, I'm going to close with that, I think. And then the advanced source is about candlesticks. What are candlesticks? Let's just go to a chart ourselves. So this is the advanced source. We will learn about candlesticks ourselves, but go ahead and check this out. This one is just quite a lot in one go, and therefore we've put it at the advanced source. So an actual price chart, what does that look like? Well, we have a tool trading view, which you're all going to be using extensively. So make sure that you start to familiarize yourselves if you haven't already with this. But basically, we're looking at a price chart right now. And in this case, we're looking at Tesla. So the Tesla stock, I'm going to stay away from crypto assets for the time being. Not for any reason, but I tend to, if I look my watch list, for example, you will see, not a large list of stocks, let me tell you. But anyway, it doesn't matter. Another perspective that I can give you is that behind these markets, if you think what a weird break, I want to do it like this. Behind these markets are people buying and selling. And that is the underlying of what you see in a price chart. And it's basically a visualization of supply and demand, as I said, but also about human behavior. There, as I mentioned before as well, people are very emotional, I guess. There's a lot of emotion in markets and asset at times. Sometimes not, when an asset is just not moving very much. But when something like Bitcoin goes from 2 to 20K or from 10 to 69K, at those peak moments, at the highs, there's a lot of emotion involved, and that emotion is also visualized. You can extract that emotional, the emotion behind certain price movements. You can also extract that from charts, and the more you study that, the more you study this human behavior factor within prices, the better of a participant you're going to be. It's going to prevent you from, for example, buying something when everybody's talking about it and the hype is super big, when actually price is telling you something like, hey, yeah, wait a minute, and I will give you a lot of examples of how to, for example, move your way around market tops. So this is something that the research that I did is like in 2017 when Bitcoin peaked, I didn't sell, and I was like, okay, and it went all the way back. I have a good story about a short that went massively wrong. A long actually. I can tell that another day. But anyway, when it went down so much for a very long time, it was bear market. It was just a lot of pain, and it's like, okay, instead of throwing in the towel, I was like, okay, I want to understand how could I have figured out that I needed to sell in that area, and I found several clues, and that led me to, instead of selling at the highs, that led me actually to buy the bottom or at least around the bottom of like $3,300 or something it was at that time, using the signals that I found at the top of the peak of the cycle or that cycle, and using that methodology to pick a price when it was actually going from 6,000 all the way to 3,100. And I saw the same signals, but then to the opposite side, where there was not like irrational exuberance to the upside, but like a lot of panic. And price painted a certain picture in that moment, and that led me to say like, okay, everybody's panicking, but the panic is just way too extravagant. And this may actually very well be a good time to buy. And then on the price chart incorporated with volume, you could see that there were actually buyers. And generally, that's where the smart money, I wouldn't consider myself smart money, I'm not trying to say that, but as you sort of study this and price behavior and what traces price leaves, you will get better at determining these price points of where to enter and where to exit. And in that way, again, tweaking your portfolio and perfecting your, upping your ultimate P&L. Okay, I will try to keep this short as usual. You know me by now, but where are we? Yeah. So that's a little bit of a perspective on price. Where were we? Yeah, so this is let's look at just at Tesla, what I'm trying to convey over here. There's several ways of looking at a price chart. So at the bottom axis over here, we have the dates, and over here on the right, we have prices, right? And if you just take any given, in this case, we're looking at a week on the top left corner, you can see 10 seconds, 1 minute, 5 minutes, 15 minutes, etc. And this is just the trading period that is tracked. So in this case, we're looking at every dot that is connected is a week of trading, and it takes the average over here. Okay, so that's one way of looking at it. If I select this one, for example, we're basically zooming in, right? We're having like each dot would now represent a day of trading. If I'm not sure if I'm saying that correct. It becomes easier with Japanese candlesticks, but I'll show you that in a second. But you can see we're zooming in, and we can zoom out all the way to a month as well, right? And you can, like, a very clear example already about supply and demand. So a short basic introduction of how technical analysis work. When price, there's a dog howling next door. I don't know if you can hear that, but poor dog. He's always being left alone by the, well, not always, but sometimes he's left alone, and the dog doesn't like to be alone. Anyway, here we have, for example, Tesla in 2011, 12 and 10, etc. And here we can very clearly see that if you bet on the person, right? If you were to say like, okay, Elon Musk doesn't really have a car yet, but I love his, style, and I love how intelligent he is and his determination. And, Peter Thiel said never bet against Elon Musk. And, that's true for many founders, many business owners. Anyway, here you can just very clearly see that this from all the way over here, yes, it does take time. Again, transferring money from the impatient to the patient, right? These movements are very hard to outtrade. Another side note to that is that with this sort of, if you have a founder and a good company, you can comfortably use more size, and then you can benefit from runs like this. And this obviously is like from the 2000, so this is 12 years. It is some time, but it is a 100x price movement, right? Or even more than a 100 times your money price movement. So just to simplify, every $1,000 would have been 100,000 if you do this. And you can also you see the difference between doing your research and picking an individual stock because you like a certain person with a vision, rather than putting it in the S&P, right? You can also split it 50% S&P, and maybe you get a little bit more adventurous trying to find stuff like this. Anyway, okay. As you can see, I can really, I don't know. Seriously, if I don't stop myself, I can talk for hours. So I hope in my videos you've grabbed some coffee and some popcorn. I don't know. I don't know how you guys get through this. Just kidding. So anyway, price had moved in a certain way over here, but then we see something very interesting. All of a sudden, we have this big movement, in 2013 over here, and price stopped at this level, or at least saw the very first reversal. I can say, and that, for example, in when studying price charts is an interesting level to look out for. Why is that? Over here, we can sort of. And this is looking at the past, but that's what we got to work with, right? This price level of looking at the right, nearly $13 now, was a very interesting price moment, because that's where, buyers decided to say like, okay, well, we've had a good run. Maybe, this is what Tesla is not worth anymore. It's overvalued, and we're going to sell. So a lot of selling happened. Price went down. We can also measure this, and we'll talk about this more extensively, how to use these tools. But price, the down movement over here was like 35%. That's quite something. But the interesting point here, how you can get information of this, is like, okay, if this level was interesting in the past, it may be interesting in the future as well. And what we see happen a lot of times is when there was a strong selling point in the past over here, it can, if price goes higher and price returns to that level, it can serve as a good buying point for the future. And that's basically what you see happen here. So first, it's a level where there is supply, so people selling, right? And then there is all of a sudden this supply level turns into a demand level, right? You have like in 2015, 2016, 2016, and over here all the way in 2019, this $13 was probably where people said like, okay, well, we came from 23 over here, but that $13 level, that's where I want to get back into the asset, or people that have been waiting for a long time get into the asset there. And subsequently, it's been a good entry level to catch this larger run. A very similar approach happened over here. So we break this 13 level, and then we go all the way up here. And you can see it happen again on Tesla. It's like, okay, supply level or resistance, we can also say. We say support in this case. Right, resistance over here, support, resistance, support, etc. right? And then you see it happen a year over again. So people sell at this level, at the $18 level. It breaks through and it comes back, and this 18 was, at least temporarily, a good point to be buying. And this way we can identify certain interesting price levels. By the way, this in the middle over here is what we call a range, when price is ranging, just going up and down between two levels. And that brings its own certain information and strategies attached to it. Okay, this was a very simplistic view. One thing that I want to just point out is that we can switch from a line chart over here to candles. In my case, I'm using hollow candles over here. And what is a candlestick? A candlestick basically shows you a certain trading period. So in this case, we're looking at 1 month of trading data. So each of these bars is 1 month of trading data. And candlesticks just provide you a little bit more information. They show you 4 things. They show you where price has gone highest of a trading period. So in our case, a month. So the highest price point in a month, the lowest price point in a month, the opening price for the month that is coming, and the closing price for a certain month. And with these 4 points, information points, you can just see you can get a little bit more information than just a price line. Okay. And a clear example is when price, for example, behaves in this way. When a candle has a very long line, we call this a wick at the bottom. Let's zoom in a little bit. Sorry, over here. For example, when we have this large wick at the bottom, it just means that in this area, there's a lot of demand. Price went all the way down to the lowest point, remember, of the candlestick or of the trading period. And it was pushed up all the way back. And from there on out, usually you can safely say like, okay, well, this candlestick more often than not shows you there is interest over here, and around this level or slightly below is a good place to be a buyer. And subsequently price made a move upwards, right? And we'll look at plenty of examples, but just know that candlesticks provides 4 information points. And with that information, you just simply have a little bit more information about how price behaves in a certain trading period and what that can potentially tell you for the next trading period. Remember, historic price data, analyzing historic price data in order to coming up with an educated guess. And it very much differs from gambling because there's skill involved in this. But everybody looks at the same chart, but people extract different views from it and make different decisions. And yeah, as I said, I can keep going, and I will probably do some more in the next 2 videos. But I think that is sort of it for this video. So we've got some candlesticks. I've showed you a little bit like price, interest, supply and demand, or support and resistance zones. And just the fact that we're going to be studying price, and by looking at price and how it behaves, we are going to try to determine where an asset may go in the future. Okay. I think that'll do. As the sun is coming out over here, let me do this. Shouldn't be doing this. This should be cut. I'm not cutting anything. Raw videos. I think this is quite clear. So looking at a little bit more short term. So short-term price fluctuation, and we'll be looking at plenty of charts to see, if this stuff really works. So yeah, and the whole the gambling and does it work story, like the better your skill set, the less you're gambling. It's just really that simple. If you throw money into a market without any sort of research, any of this type of research, then you're very close to gambling. But the more you study price, you study your assets, fundamental, you study sentiment, etc., you will see that your brain will start to create a certain picture up to a point where it's becoming intuitive. And you look at a price chart and you immediately see whether there's strength in the market, whether it's time to sell, whether it's time to go all in, etc. So if you're daunted by this, don't worry, just go through the sources step by step, and we'll take it step by. And obviously the lectures are there as well. And questions, Discord, you know the drill. How long is this? 24 minutes. Okay, still under 25. Let's try to keep 25 as a maximum. See you in the next one.